Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high-quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see here is that we have a market which is currently testing a quite significant level of previous monthly resistance from which all this move to the downside was created, which the market then broke to the upside and is currently retesting as support. So what we have here is a market that is currently testing previous monthly resistance turn support, and we could expect a potential reversal to the upside away from this area. We can also notice that from a pattern standpoint, we have a very clear impulse and correction. And in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have both the 50% and 0.618 retracements from a Fibonacci standpoint lining up precisely with the previous resistance turn support that we have just identified. And this creates confluence of support inside of this area that we could in fact expect this market to potentially reject to the upside. Dropping down on the weekly time frame, what do we have? Now, from a weekly standpoint, what we can notice is that the market at the moment is testing exactly the previous weekly low. From here, all this previous rejection to the upside was created. At the moment, the market is testing exactly this same zone from which there is a possibility to see more potential bullish continuation being created away from this area. Dropping down on the daily time frame, what do we see? Now, from a daily standpoint, this is where price action starts getting very interesting. In fact, what we can notice is that during all this move to the upside, there is one candle which is not related to the move, which is exactly this red candle here. This shows that even though we had a very strong impulse to the upside, anyway, when the market reached this area, it found resistance at its zone, printing this red candle. This means that since the market has now broken this level to the upside and is currently retesting it coming from above, this is actually previous daily resistance that is now turned support, from which a potential reversal higher seems possible. We can also notice another quite interesting thing, that in creating this move to the downside, the market has also printed this M pattern. And in general, after the creation of an M pattern, what we could expect is a potential rejection to the upside for the completion of the M pattern at the neckline, which is the previous support turn resistance. So here in the daily time frame, what we could expect is a potential reversal to the upside for a completion of this M pattern at the neckline, which is this previous support here turned resistance. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data precisely for gold, what we can notice is that with the last reports, net positions have been increased. We went from having 101.9k net positions up to 138.0 net positions, showing a strong increase of the net positions. This means that institutions have been overall increasing their longs and decreasing their shorts. In fact, we went from having 124k shorts all the way down to 97k shorts, and longs went from 226k to 235k. So currently we're sitting with 235 100,000 longs from an institutional perspective and only 97,000 shorts. So clearly institutions have been longing gold and closing their shorts. Now this increases the probabilities that we could have a potential reversal to the upside away from this area. And we can also notice that since we have an impulse and correction, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg, which shows us how we have both the 0.618 and 0.786 lining up inside of this area, which creates confluence of support. And since we are inside of a confluence of support and institutions have already been increasing their net positions, we could expect more potential institutional longing happening inside of this area, which at that point would further increase the probabilities of a potential rejection to the upside away from this zone. So how we could be approaching this potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to a bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the completion of this M pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the CO2 data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the program from $497 all the way down to only $97 one-time payment. And if you scroll lower, you will see that at the moment there is still time to join before the offer expires and price goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in the description and I will see you in it. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.